Hey guys, Micah here, back at you with another iMarketslive video. And this video will be the follow-up to yesterday's video on how to use the harmonic scanner and get multiple trades if you know market structure. And I guess you can kind of say this is a results video, and I left my charts up from yesterday to show you exactly why market structure is so important. So as usual, like, comment, subscribe. If you looking to get your start in Forex, click on the link below, www.tradewithmicah.com. Me and my team is more than happy to partner with you and get you started on a solid foundation in this journey. And for those of you who are watching this, if you guys didn't see the last video, I will put it in the description, and I'd suggest you watch that first so you can get the whole proof of why market structure is important. So again, that link will be in the link to that video will be in the description. So that trade was the EurUsd, and it created a harmonic pattern. And it actually went away from the scanner because it was done, right? So I still saved it on my chart, right? I still saved it on my chart. And let's get to that, right? So sorry, let me get rid of this. So in yesterday's video, you would have seen something like this, right? And I explained, right, the market moves in 3 different ways. And again, you'll see that in the next video. But why is it so important, right? I drew this out yesterday, right? And if you took the harmonic trade, knowing market structure, you would have been out at take profit 1, because this is where take profit 1 was, right? Because what I seen, and I mocked up the full chart, I knew there's a strong possibility of the market moving more to the downside. And you can watch the video, right? It's exactly what it is, right? So let's see what it did. And again, market structure, you can't go wrong. And this is what we're teaching our team, right? So if you got into that trade yesterday, you would have got in right here, right? For the sell. Your stop loss would have been up here. That would have been your stop loss. And now let's see the movement. You know what? Let's calculate that stop loss so you can see the risk to reward ratio, right? So that would have been a 16 pip stop loss. Not very much. Not going to blow your account. But from entry, like I said in the other video, it has the potential to go, right? To this support line right here. So let me get that. From entry. So that would have been your entry. Right now it's sitting at about 65, 66 pips in profit, right? Potential to go about 135. So again, for people that only take the harmonic trades just to take the harmonic trades and don't know nothing about market structure, right? They would have lost out on that 66 pips or that potential 135, right? The only way I would get out of this trade, and I'm going to show you how or when I would, right? Like I said, market does the same exact thing, right? All the time, right? There's your impulse, there's your flag. Now you're getting your impulse again to the downside. It might come flag one more time and continuation, right? But the way I would get out of this trade, right, if from here, if price broke this trend line, right? Once it breaks this trend line and I get the MACD coming back up, I'd exit the trade. But here's the cool thing. You can follow, right? You can follow and keep moving your stop loss in profit so you don't lose anything, right? So this is what I mean. So this should have been your stop loss, okay? Once it reached, say, 20 pips in profit, right? So you could have moved your stop loss to break even or just a little bit in profit. Once it started moving, right? Again, you could have moved your stop loss a little bit more down, like about 20, 30 pips. Once it broke this, right? Once you seen the flag, you would have left your stop loss where it was If it hit it, it hit it. But once it, you draw your trend line and it breaks out again, now you move it more, right? And keep following the trade so you can maximize and you can squeeze every pip out of the trade. You're in profit right now, right? So if you get stopped out at 30 pips in profit, hey, who cares? You're still 30 pips in profit and you're following the trade. So I hope you guys enjoyed this video. I know it's a quick video, but I just had to do this to show you how important actually learning how to trade is, and not just taking signals for what it is, right? It's very, very important, because you're selling yourself short. And if I'm not teaching this to people who partner with me, again, I'm doing them a disservice, right? So again, when you partner with me, you'll be learning market structure. Our team is very, very strong in market structure. And again, if you want to start your journey, click on the link below, www.tradewithmicah.com. And don't forget that video that I'm going to put in the description. That was the actual video I did of this harmonic pattern, right? And you'll see the exact same setup. I hope to see you next time. Until the next video, aloha, stay blessed.